Well, good afternoon, everyone, and welcome to the MIOYM Blueprint, a strategic approach to residential equity. Today, we are pulling back the curtain on how we identify, acquire, and exit high-velocity real estate deals. What we're going to cover today is who we are, our history, and 25 plus years of industry experience, what we do, the high velocity niche of distressed residential assets, our proprietary technology, how we use automation to dominate the acquisition process, the value add, our specific formula for property rehabilitation, deal analysis, how we ensure we never overpay, construction, managing risk with a national boots on the ground network, our exit strategy, how we turn assets into liquid capital within 12 months, investor returns, a breakdown of how you make money fee-free, give a property example, a walkthrough of a recent successful project, and then tax advantage investing, how to utilize your IRA to fund these opportunities. Now, I got a quick disclaimer here before we begin. I want you to note that this presentation is for informational purposes only. It does not constitute an offer to sell or solicitation of an offer to buy any securities whatsoever. All investments are made solely pursuant to the term sheet or official term sheet and subscription agreement. We are targeting accredited investors. Reg D says that, if you have a net worth exceeding 1 million and excluding your primary residence, or a sustained annual income of at least 200,000 individually or 300,000 jointly with a spouse. Now that we got that out of the way. MIOYM Equities is a private equity firm specializing in a high velocity niche, the acquisition and rehabilitation of distressed single-family residential properties across 36 major metro areas. We focus on undervalued assets in urban hubs, avoiding rural markets to ensure liquidity, and we can get out of them as quick as possible. Now, we aren't new to this space. MIOYM has been operational for over 18 years, launched in the wake of the 2008 financial crisis. Our CEO, Mark Cox, has been active in real estate since 1997, starting out in Baltimore with row houses. He oversees the acquisition and sale of more than 600 properties in that time. Now, I myself bring 20 years of experience as a financial advisor and operator to this firm, including 9 years managing a boutique securities firm in New York City. This combination of real estate acquisition, expertise, and disciplined financial management has allowed us to deliver consistent results. Historically, our investor return on investment has ranged anywhere between what it's currently at, 15%, and upwards of 36%. Now, our strategy relies on capturing deep market discounts, often 60% below market value. To find these deals at scale across 36 states, we use a proprietary technology stack designed by Mark Cox, my business partner. Now, I'm going to kind of go off script a little bit here and show you the system live and in effect. I actually don't know what we're going to see, but I'm going to hook that up right now. So what you're seeing here is there's total properties of 1.5 million. We have deals of 512, meaning those are the only deals that fit our requirements, whether it's below 600,000, whether it's, minimum bedroom size, minimum bathroom size, and square footage. One of the biggest things, believe it or not, is the square footage of the town that we're buying in. Not the square footage, the population of the town that we're buying in. And here's 1.5 no deals. If you can see here, we have 1405 Northeast 4th Avenue, Boca Raton, Florida. The listing price is $495. We have an aftermarket value of $3.7 million. So this looks like it's a pretty, got a lot of meat on the bones. And then you have 156th Street in Gilbert, Arizona, Thornbridge, Argyle, Texas, Maplewood Avenue in New Jersey. So you can see there's plenty of properties all throughout the country, Louisiana, Texas, Colorado, Connecticut, Maryland. So this is where we get all our deals. It's automated and sends out offers to the owner of record, the broker, whoever is on the property. Let me get back to my presentation, so not to go too far off script here. There we go. Bang, bang. Here we go. Buying right is only half the battle. We manage a national boots on the ground network of vetted contractors who upload construction inspection detail reports, including scopes of work and progress photos in real time. Now, as you can see here, we mitigate risk through a fixed cost approach to renovations, standardizing items like roofing, flooring, and structural reports. We actually have a technology that'll tell us what a flooring would cost here in New York, as opposed to Texas, as opposed to Louisiana, as opposed to up in Michigan. And our average turnaround time from acquisition to retail ready is 90 days after we acquire the property. Now, each property is isolated in its own LLC. Let's say we buy 123 Main Street in Wauchoga, Wisconsin. It'll be 123 Main Street LLC, Wisconsin. We actually leverage institutional relationships where lenders fund 85 to 90% of the purchase price and 100% of the renovation and closing costs. So we look for equity partners to cover the final 10 to 15% of the acquisition, closing costs, legal fees, and any carrying costs that may come to be. Now, our target is a 12-month exit on all of our projects. Some are shorter, some are a little bit longer, but we anticipate 12 months for every project. Once the project is sold or property is sold, the debt is repaid, and you as the investor receive your equity back plus a 15% return. And this is 100% fee-free. To ensure we hit these timelines, we utilize a two-part exit strategy to get the asset sold. We use a local listing and we list the property immediately with a local realtor to capture the standard of the retail market. And at the same time, maybe even sooner than we engage the realtor, which they are fully aware of, we list it with our affordable homes department. Simultaneously, we market the property to first-time home buyers here in our office. It's actually right behind me. Now, the monthly payment bridge, we provide opportunities for buyers to own a home for the same monthly payment they would otherwise spend on a rent. And then we also introduce these buyers to an FHA lender and offer down payment assistance so they could achieve home ownership for the same cost they expected for a rental. Now, our goal is to acquire these properties at a 60% discount, as I mentioned before. And like I said, we use proprietary technology designed by Mark Cox that helps us identify these distressed, undervalued homes in these markets. Once we acquire a property, we renovate it to increase its market value. Like I said, institutional lenders fund us 85 to 90% of the purchase price and 100% of the renovation costs. So all we're doing is leveraging the financing to maximize returns. We are looking for equity partners to cover the remaining capital stack, which includes, as I mentioned earlier, 10 to 15% of the acquisition price, closing costs, legal fees, and any carrying costs that the debt may incur. Once the property is sold, the debt is repaid and you get your equity back with a 15% return, 100% fee-free. The reason why I keep pounding my fist on the fee freeze because a lot of operators charge management fees to do the construction, just fees to hold your money, and we don't do that. We get all the upside of the property when we sell it, so we try to get your return to you net, net, net of all costs, which is 15%. Now, one thing many people and many investors don't realize is that they could participate using tax-deferred money through a self-directed IRA. Now, some of the benefits of investing in your IRA are tax-deferred growth. Your returns grow without immediate taxation, not until you're ready to pull that money out, and hopefully you're in a lower tax bracket. It also gives you diversification. You have the ability to move retirement funds out of the public markets and into tangible real estate and getting, given returns that you know what you're going to get. You also get compounding returns. When you reinvest high velocity returns with a tax advantage shell, we've actually established relationships with several of these self-directed IRA companies, Equity Trust, the Entrust Group, and Heritage Group, just to name a few. And I've personally worked with many more providers that we don't have actual formal relationships with, so we could likely accommodate your current custodian. But I would have to speak to them first just to make sure we're all on the same page. Now, to summarize, we find 60% discounts using our proprietary technology. We renovate in 90 days and exit within 12 months to provide a 15% fee-free return. I would like to thank everybody for their time today, and for a full or a copy of the full term sheet or to discuss specific upcoming opportunities, feel free to contact me at the email address that I emailed you with, robert@mioymequities.com. That's spelled MIOY as in Yankee, M as in Mary, equities.com. Again, robert@mioymequities.com, and I can get you all that information you need. I will be reaching out within the next couple of days with the recording of this video and then just a thank you email, just saying thank you for your time. So I appreciate everyone's time. I hope you got something beneficial from this webinar, as it is an educational one, and I look forward to speaking to everyone that is on this call now.